In this video, we will go over a 1-minute ICT trading strategy that covers the entry as well as a scaling opportunity and how to exit. So make sure to stay tuned till the end. Without further ado, let's get started. If you would like to join the academy and be a part of the membership, then click the link in the description. With this strategy, we are going to be using GBP USD and we are on the 5-minute time frame. So what we want you to do is let's solely focus on this piece of price action over here. And the key part about this strategy is it relies on price consolidating or being in some sort of range during the London to New York session. So if we look at this example, we are going to have a good look at liquidity. So if you're struggling with liquidity, then this is a good example for you to look at. Let's look at what price did. So from the Asian session, we have been moving down quite nicely. And then during the London session, we create this low, we push up, and then from there we are moving sideways. Now notice how we've created liquidity here, and previously we created liquidity here before price pushed down and took that liquidity. Now that's very key to what we are talking about. So let me just mark out this liquidity here as that's buy side liquidity, and this liquidity here, which was previously sell side liquidity, which actually just got taken. So let's mark it with a dashed line. The key that we need to understand is, so we're in this transition period within the market where we're transitioning from the London session to the New York session, and that's where price is right now. We've taken sell side liquidity and we have buy side liquidity left over. And that's the key thing we need to understand here. And as, let's say, SMC traders, you would be looking for a selling opportunity, right? Because this would be maybe a break of structure if you count the wick, and you'd be looking at this supply zone here. So if I mark that out as a possible sell idea, but you would be cautious of the liquidity above it. So this buy side liquidity. It is good to note though, for those of you who are like me, who mainly trade SMC compared to ICT's newer content, that we actually do have a nice little supply area here that would be a good selling opportunity because we have liquidity below it, some inducement, and those that sell early here would get caught out in some sort of SMC trap right there. But we're not focusing on that for today's video. So anyway, that's what we have. And when we're building this bias for this consolidation strategy, all you really have to do is mark out sell side liquidity and buy side liquidity. We can see that above this buy side liquidity here, we don't have much liquidity there or anything that we need to be careful of. We could even mark out this one here, and we definitely have a very, very key piece of liquidity here with this candle. This candle pushed down very strongly. We know there was a lot of momentum in this candle. So this sell side liquidity is something we need to keep an eye on. Now let's move that and turn that into a line. Okay, so there's the buy side liquidity and there's the sell side liquidity. So now that we know that we have the buy side liquidity and the sell side liquidity, what we'll be looking to do is essentially sell this or buy this. But which one do we do? So because price took sell side liquidity at this point here, just before the end of the London session, we would expect that price goes and takes buy side liquidity before then taking sell side liquidity. And that makes sense, right? Because that's like price pushing down, lower low, lower high, lower low, take this. So fake traders into taking buys and then pushing lower. So that's what we're going to be looking at the moment. And that's what we're going to be focusing on the 5-minute time frame, essentially marking out liquidity and looking at trend / structure. So now if we move to the left and have a look at what we have to the left, now we're trying to build that bias of why do we want to go to the downside. And clearly we can see we had this push up yesterday, and then we've been pushing down since Asian session to the London session, and now we're saying, okay, so in terms of liquidity, what do we have to the left? Very clearly we can see we have New York session low here, which was the move before this very impulsive move, which shows that there's a lot of liquidity resting below this point here. We have the London session, and we have the New York, London, and Asian session over here as well. So now the smaller time frame, or let's say the more recent price action bias, is in terms of liquidity to the downside, and in terms of, let's say, daily or medium term bias is to the downside as well, because of all this liquidity that we have resting over here. So now what we can do is now finally drop down to the 1-minute time frame, and we're going to be using the 1 minute to enter for these types of trades. So dropping down to the 1-minute time frame, we can now finally look for entries. So essentially what we're going to be looking for the entry is we want price to take the buy side liquidity, and in doing so it needs to create structure that we can break and then enter off an imbalance. So let's wait for price to do that. Okay, so at this point here we can see price has actually taken that buy side liquidity, and I want you to focus on what happened just here. So as price was moving up towards this buy side liquidity, we actually created some structural points, so one here and one here, but in doing so we actually also created, or engineered, might be a better word, some equals. So engineered liquidity plus structure, then liquidity grab, and then push to the downside. At this point here, what we're going to be looking for is very clearly on the 1 minute time frame a breaker structure. Let's see if we get that. So over here we have this low, and then we have this low here, and what we're looking for is price to break the low, which it looks like it has with this candle here, and then we are looking for an imbalance to be created. So if I just move one candle, we can actually see we've broken this structural point here and we've created this imbalance over here as well. So this is very important. I'm going to mark it out because this gives us an entry opportunity for this trade. So if I just move backwards, and now what we can do is start to look at how we can enter this trade. For this video, we'll be using Trader Edge, which is a backtesting and journaling software that allows you to track key metrics about your strategy and how you trade. It is very simple to use, and they currently have a 7-day free trial, so go check them out. I will be using this software personally for future backtesting and journaling. Link is in the description below. So essentially, we would have our entry here. Stops for me would be above these wicks here, because we don't really have any business for this trade to push up higher than this. So let's say, what's that high there is 11.4. let's move to about 11.9. and now in terms of a target for this trade, what we'll be looking for, normally we'd go for like a session low like this, but because we have this low here which had so much momentum in this candle and it's the sell side liquidity, we can target that low there, and that gives us a nice 1 to 4.95. so if I go to the backtesting software, let's put in an initial of about $1,000, and then I'm going to put in a profit of, let's do 4.95 actually, and a loss of 1%, because I'm going to be risking 1% on this trade. So now what I'm going to be looking for is price to actually trigger me into this position. So let's see what happens. Okay, so as you can see, we get triggered straight away into this trade. This imbalance here got filled straight away, and now price is moving down. So now what I want you to focus on is trade management at this point. And this is something I haven't really covered with this style of trading before in my previous videos, but let's do it in this video. So notice what price is doing as it's coming down. It's a good thing that I stopped it in time as well. So as we can see, price pushed down and created a low here. Now, if we zoom out a bit, we can see we clearly had these structural breaks there as well, and here and here. And what I want to bring our attention is to, this was the sell side liquidity, and this was like the major sell side liquidity that we expected price to go and take, but it didn't. Instead, what price did was it created an engineered liquidity with these two lows. So a lot of traders would be scared at this point. Price is moving somewhat impulsively to the upside, and they would be actually looking to exit their positions, and that's actually not what you're supposed to do. Most people forget that the best trades generally give you scaling opportunities, and in this example we get a very nice scaling opportunity. So whether you enter off imbalance, you can enter off imbalance here, or if you enter off of an order block most of the time like I do, then you can enter off an order block. In this case, I would actually personally enter off an order block because it gives you a better risk reward, and I would be looking to enter just here. So stops just above, so about 7.2, and my target again would be the same target. Now notice with this trade opportunity, we have this trade here which gives us a risk reward of about 4.95, and then we have this trade here which gives us a risk reward of 5.5. and because we were able to use the scaling or get in on a scaling, we've actually increased our risk reward from this trade. Generally, what you'd want to do when you're entering from a scaled in trade is ensure that if price does stop you out, you put this trade's take profit to just above to ensure that you overall don't lose anything on this trade. So as you can see in this example, you wouldn't lose this trade and you'd end this trade idea at break even. But for this example, let's just put the target back to that low and let's see how it plays out. Price completely smashes our targets. If I go back to the 5-minute time frame, we can also see that it's started to push down further to take out these liquidity low points as well. So now we can go back to our backtesting software and we can put these two trades in. So one's a 4.9 and one's a 5.5. So that was 4.9, that was 1%. Let's add profit, and as you can see, it very nicely adds that profit to our chart using that $1,000 as our benchmark. And then we had a 5.5, add that profit, and as you can see, so for this day we will be up 10.67%. we've taken 2 trades, profit factor, etc., and all the key metrics are over here, and we got a nice score of 80% on the edge score. And that's it for this trade idea and this trading strategy. Thank you for watching. Make sure to subscribe, give this video a like, and I'll see you in the next one.